Hey, everybody, this is Stephen Gardner, author of Taming Wall Street, coming to you with another fantastic interview with Paul Moore. This is a friend that I have never met, but we have been communicating and sharing ideas with each other for many, many years now.
Yeah.
And like every show, I only try to bring people that I think have wisdom and ideas that are actionable and will bring value to your life. Let me give just a little bit of bio on Paul, and then we'll go ahead and get started. So Paul has an MBA from Ohio State. He was in the management development for Ford Motor Company. After that, he started a company that he sold for $2.9 million. He's been a part of 85 real estate investments. He's been featured on HGTV. He's a contributor for Fox Business and Bigger Pockets. He's been involved in Hyatt hotels and other multifamily projects. And he is now the managing director of two real estate funds, which you can look up under Wellings Capital. Paul, thank you for being on our show today.
Great to be here, Stephen. Thanks for having me on.
Absolutely. So, we first met a few years ago when I was on your podcast, How to Lose Money. Now, for a guy who makes money and makes his clients money, how on earth did you come up with that podcast name?
It's a great question. I used to go to these father-daughter retreats with my daughter, and I also went to, like we all do, real estate or success webinars and seminars. And I see these people up front on the stage telling all their successes. And I would talk to the people in the audience, and they would be kind of slunk down, and they'd be like, oh, I'll never be able to be a great father like that guy, or I'll never be able to be as successful as that guy. And, once I got into a position where I was actually speaking publicly, I got to know these people.
Yeah.
And I realized, Stephen, they have the same pain that we do, the same frustrations, the same losses along the path, the same insecurities that they're going to be found out as a fraud.
Yeah.
And I thought, wouldn't it be amazing if I could interview some of these people who are really successful now and hear about their pain and failure along the path? And so that's what we do at How to Lose Money. And we've had a wonderful time. We just interviewed Gino Wickman, who wrote Traction, and we've had all kinds of other wonderful guests, including yourself.
Yes. Oh, yeah. It was so fun to be on there. Although, it was like ripping open old wounds. But I'll tell you, just like a broken bone, it heals stronger. And I have moved forward from failures with wisdom and like everything we're going through right now. I've been putting out these videos trying to tell people, listen, I got my hat handed to me in 2008. Here's 10 things that I learned. Because a lot of millennials, they've never been through something scary like this.
Yeah.
And so if I can share that wisdom, just like you've shared a lot of wisdom with me, I just think that's such a great podcast, How to Lose Money, if people want to go on and find that. There's over 200 shows, all of them just packed with really, really powerful information, including my own story. I think I'm around number 19 to 25, something like that. So you can go check out my own story. I'll put a link here below. But okay, so another thing I want to talk about, you wrote a book that did really well called The Perfect Investment, and it's about multifamily homes. And now, as you've gained wisdom and experience, you've kind of gone in the opposite direction of some of your old thinking. Tell me a little bit about that.
Yeah, so I was in residential real estate for about 11 years from 2000 on. And then in 2011, we built a ground up multifamily property, and we operated that and then sold that. And I decided, and I told my dear wife, that I was just going to do multifamily from now on. I wasn't going to chase any more shiny objects. I wouldn't do that, right, Stephen? And so anyway, but seriously, after about 4.5 years of beating our head against the wall and not finding assets that made sense, anybody in the commercial real estate world knows that apartments are extremely overheated. And they've just been overpriced for years. I mean, at every level, 2014, 15, 18, whatever, they were always at a record level compared to, the same type of apartment, even right before the recession. I mean, far higher. And so we just weren't willing to overextend ourselves. We weren't willing to pay 10 or 20% more than we thought an asset was worth just to get in multifamily. So we branched out into self-storage and mobile home parks a little over 2 years ago. And I was pleasantly surprised, to say the least, at all the opportunities to acquire mom and pop assets in the self-storage and mobile home park arena. Those areas are so fragmented. For example, there are about 54,000 self-storage facilities in the US. That's the same as all the Subways, Starbucks, and McDonald's combined, but
Oh,
a
wow.
huge percentage of those are owned by mom and pop or independent operators. They don't have the knowledge, they don't have the resources, and they don't even care about upgrading them, maximizing value. I mean, they had the attitude, if we build it, they will come, and people did come for decades, but now they're being outgunned by great operators. So if we can acquire those assets, upgrade them significantly, and then sell them to a REIT or sell a portfolio of them, better yet, to a REIT, there's a huge amount of profit to be made in that. So we pivoted at Wellings Capital, and we're doing that. In fact, I wrote a new book on self-storage investing that's coming out on Bigger Pockets soon.
Okay.
I'm trying to call it the perfecter investment, but we don't know how to
Perfect.
spell that.
Yeah, the much more better
Yeah,
investment.
right.
Yeah,
That's it.
I tell people this all the time, and maybe you can back me up on this. But I've now got 8 books out on Amazon, and
Mm-hmm.
I told my wife several times it was easier for me to write a book than to come up with a great title.
Oh, I know.
So I feel for you, man. I feel for you. Let's talk for a second. We're going through some hard times. The market is up one day and drops big time the next, and now this stimulus package has come out. But let's talk. I want to pick your brain for a minute. Let's discuss risk and reward and safety versus speculation. What can you tell our listeners about those topics?
Yeah. So when I first, I like you mentioned earlier, we sold our company to a publicly traded firm when I was 33, and I thought, I'm an investor now.
Yeah.
And I wasn't. I was actually a serial speculator.
Okay.
Investing, Stephen, is when your principal is generally safe and you've got an expectation of making a return. Speculating is when your principal is not at all safe and you've got a chance to make
Yeah.
a return. And I actually confused the two for years. And so I made a lot of money doing that, but I lost a lot more money, I think, speculating. And so it took me years to realize the difference. Warren Buffett really helped me understand the difference. And so I think the problem is this. We think low risk leads to low return. High risk, therefore, leads to fill in the blank, high return. But that's not true at all.
Yeah.
High risk leads to a potential of high return or a potential of total loss. And the problem is when we flush money, when we sink money, and this is what my partners and I did many years ago, sink money to the bottom of a hole in the ground, hoping it'll produce 100 times as much money in oil, we're risking that money and it could actually produce zero, which is exactly what happened in that case.
Yeah.
True wealth, in my mind, and the reason I think people love investing in commercial real estate is true wealth is, it's not, limousines and mansions and all that stuff, though those might be symbols of wealth. True wealth itself is assets that produce income. And if I have assets that consistently can produce income and can, over many years, grow in value as well, that to me is true wealth. And I think that's why most of the Forbes 400 wealthiest people in the world, almost all of them, in fact, invest in commercial real estate.
Yeah, that's a good point. Over the years, I have learned that the ability to produce income leads to more confidence than just having money. Because if you just have money and things aren't going well, you can deplete that very quickly. But if you can keep cash flowing and income flowing, there's a confidence that comes from that. Now, you said something that I want to have you expand on, if you don't mind. Talk to our listeners about the difference between residential real estate and commercial real estate, and why wealthier people tend to lean towards commercial real estate.
Yeah, so let's talk about residential for a second. So if I'm Chip and Joanna Gaines Jr. and I can buy a house for $250,000, and let's say I didn't do what they do, somehow they are able to do a lot of stuff for like $35,000. How does that work?
Sponsorship.
Oh no, you're kidding. But anyway, seriously. But if I went whole hog on this and I finished the basement, finished the attic, put on an addition, put in gold-plated fixtures, and I spent like $500,000 upgrading this to an $800,000 house. If it was in a $300,000 neighborhood, Stephen, you and I know that I would never get the $800,000 out of it if it's surrounded by comps that are, $300,000. And that's how residential real estate works. Commercial real estate's entirely different. It's based on something we love called math. Now the math is, right, value of the property, the value of the asset is the net operating income divided by the rate of return, or the cap rate. And so if I can increase the net operating income, and if I can find a way, sometimes it's not possible, but if I can find a way to shrink the cap rate a little bit, the denominator, I can dramatically increase the value of the asset. And if there's leverage on it, safe leverage, of course, I can even multiply my return on equity much, much more. And so a quick example is, if I buy a self-storage facility for, let's say, $4 million, let's say I put in $2 million cash and $2 million debt. And let's say I go in on day one and I sign an agreement with U-Haul, and I had U-Haul trucking, rental trucks in front of the self-storage facility. Well, that can add and sometimes less, but it can add $3,000 to $5,000 a month to my bottom line with no significant cost, especially if I already have an employee on site anyway.
Yeah.
Well, that's $4,000 a month. That's $48,000 a year. Let's do the math. $48,000 a year added to the net operating income divided by a normal cap rate of 6%. I haven't done the math lately, but if I remember, 48,000 by 0.06 is 800,000 increased value. Wait a
Wow.
minute. I just increased the value of that asset by 4 million divided into 800,000. I think that is 20% increase in value. But I just increased the value of my equity not by 20%, but by 40%. If I sold it the next day, in theory, if there was no transaction costs, I'd have a huge increase. I mean, I'd have a 40% return on investment immediately. And that's just one example of a dozen things we could do at a self-storage facility to increase the value.
Oh man, that's awesome. So the two things I'm getting: don't get gold-plated toilets, and put U-Haul in front of your business. I'm kidding.
Yes,
No,
put U-Haul in front of any business.
yeah, no, this is good stuff, because it's not. I don't think that it's a lack of intelligence for most people. It's knowing how to think through things and then be creative, right? Like most people wouldn't think, let's add a supplementary thing to this existing piece of land that will add that, drive that much increased revenue for that little investment up front. And the two piggyback, and the combination increases your wealth significantly. Mm-hmm. I mean, that's huge. That's an incredible skill set. Speaking of skill sets, you're going to share this with people. I'm going to share this with people. We're going through possibly a recession. We've definitely watched the stock market tank and then bounce up and down like a roller coaster. What do you think are some of the skill sets that people are going to need in the next 12 months to ride this incredible, crazy situation out? What are some skill sets you think people need to be working on, or patterns of thinking maybe?
Hmm. I just wrote an article and I'm trying to get it published on Fox Business, and I don't know if they will or not, but um, the first thing I said was we can watch for government intervention, which could lead to government shaming of people who don't do, what they think we should do. I mean, obviously they passed a huge stimulus as we're speaking within the last 24 hours. And I think they're going to get involved, and they're going to really give, landlords and others a hard time, because there's obviously a lot more votes in a 125 unit apartment complex in the tenant level than there are at the owner level, right?
Yeah.
A second thing I think we can expect is media shaming in the same regard. And I think any business owner is potentially in line for that type of thing. But I think we need to be resilient. We need to be thick-skinned. We need to be patient. We need to look for opportunities. I think there's going to be, we're already starting to see mom and pop sellers panicking just a month into this crisis,
Yeah.
saying, maybe I should have taken that offer you gave me last year. Can we talk again?
Yeah.
And so if you've got cash available, I think it could be a great buying opportunity. We all know that Warren Buffett has had at least, is it 128 billion in cash sitting on his balance sheet, and he's been really criticized for
Wow.
that by his own shareholders. He hasn't made a major acquisition in years, and I'm sure he's in the buying mood today, and I think that we would do wise to follow him.
Yeah, I can't remember if it was a year or 2 years ago, but in his shareholder letter, he said, within the next 10 years, we will see a 50% drop. And then within another 10 years of that, we'll see another one. And I think he was just waiting for that opportunity to come along. And I haven't even been watching it. Things have been so crazy. I haven't been watching what he's doing, but I guarantee you he's now strategically moving on opportunity, right? I love this word. Maybe you know this, maybe the listeners know this, but the word opportunity came into existence in like the 1500s, right? And it's a sailing word, right? There were only so many ports that people could pull into when they needed to try and sell their goods, right? Someone comes from England down to Spain, they're able to get a port and sell all their stuff and then get out of there, right? And the ships would start backing up. And so when there was an open port, they could come in and make a lot of money and get out of there. There was an open opportunity, right? Opportunity. And that's where that
Wow.
word comes from. So right now, I think people need to be thinking, what are the areas that are an open port that I could stick my business or myself or my money or my skill set into and extract massive amounts of value out of this situation? There are going to be so many open ports right now, so many opportunities.
Absolutely. That's great. I think that, if we can be patient, if investors can be patient, if they can not chase shiny objects, but do what you said, which is basically really evaluate their skill set. There's a guy named Dr. Lance Wallnow, and he talks about convergence, and that's where your skills, your training, your education, your successes, and then the opposite of all those are all evaluated. And then we see, where do we really fit into this world? Where will we be happiest? Where will it not even seem like work when we go to work? And when we can find that place, and if somebody can find that now, and especially in these next 3 to 6 months, there's going to be opportunities galore to make wealth like that was very, very hard to make in these last 12 years of prosperity.
Yeah, yeah. You think the last 12 years, the people that are prepared are going to make even more, and those that aren't prepared or are fearful are going to lose even more.
Right.
So it really does come down to your mindset. And gratefully, none of my clients in my insurance or annuity programs lost any money, which was nice. But now they've got to look for those opportunities. Your people need to look for their opportunities. As we wrap up here, tell me just a little bit about Wellings Capital, and then we'll, you can share your contact information. We'll sign off.
Okay, great. So my first 11 years in real estate, Stephen, I was involved in residential. And I always had this sense I should be involved in commercial, but I didn't, I thought you needed tens of millions of dollars. I didn't know where to start. I didn't know who to trust. And so what Wellings Capital does is we provide an on-ramp, an easy entrance, an entry door into commercial real estate. Accredited investors can invest as little as $50,000 with us. We pool that money together and we invest in large, profitable projects that we expect will throw off income, will be generally safe, generally stable, and will also appreciate quite a lot. And by buying mom and pop assets, we're able to create a significant margin of safety for times like we're in right now. Because if we can go in and add that U-Haul, for example, even if the income from the storage units drops 20%, well, we're already 40% ahead day one.
Yeah.
And so that's the type of things that we do. We have hundreds of investors who have joined us in the last few years in our funds, and we're really excited about the recession-resistant assets we're in, although we are certainly concerned about our families, about the nation, about the economy, and real estate in general. We're happy to be in the two asset classes that CrowdStreet last Friday said were the only two bright spots in the whole commercial real estate landscape right now.
Wow, that's awesome. That's a good feeling. Well, I appreciate you being on here with me today. How would someone get in contact with you if they wanted some mentoring or to learn more about Wellings Capital?
They could just visit us at wellingscapital.com. That's WELLINGSCAPITAL, wellingscapital.com.
All right. Hey, thank you. And if anyone wants to learn more about what I do, you can visit yourbridgeplan.com. Thank you, Paul, for being on today, and I wish you the best of luck. Thank you again for your time.
Thanks, Stephen. It's great to be here.
Okay,
Take
bye-bye.
care. Bye-bye.